So that case settled, but as a result of it, there was some legislation that was enacted this year, effective January 1st of 2025, that basically, and that was Public Act 103983, that said if you're a remote retailer outside of Illinois with no property in Illinois, you're still going to have to do the ROT. However, if you are a remote retailer with just some presence in Illinois, but your sourcing of sales is still for location outside of Illinois to an Illinois customer, you're also now going to go ROT. So you no longer have that use tax option. So instead of getting a benefit for the retailers who didn't have anything here and let them go back to use tax, Illinois said, now we're going to make everybody ROT, which kind of gets everybody to what we were just talking about, how now you have these complicated forms to fill out. And so it didn't make it any better for anyone, but it's now at least consistently worse for everybody, if that makes sense. Uh, and now it kind of now we get to the next phase of the Illinois Department of Revenue saying, you know what? We had a lot of people register to collect use tax in 2020, but guess what? When they were supposed to change over to ROT in 2021, they didn't. So now we have all these people incorrectly collecting use and remitting use tax when they should be doing ROT. So that's where this new amnesty program is being proposed. And what's interesting about it is, well, there's two interesting things about it. Is they're basically applying a universal rate of 9%, um, instead of the 6.25% state use tax rate or the higher rate based on the localities adding on. They use a 6 point or a 9% rate for everybody under amnesty. And they said that's similar to the rate they use when a taxpayer doesn't provide records during a sales tax audit. They kind of use a blended rate between the use tax and the ROT. So they're going to apply this 9% rate to all those sales. If you're selling anything that's subject to the lower 1%, food tax or medicine, exclusion tax, they'll allow you to use a 1.75% rate. And this would be from August 1st of 2026 to 10/31 of 20. So it's not even this year, it's next year. And it covers the period of 1/1/21 through 6/30/26. So it's not taking place for another year, which kind of had a lot of people wondering, why are you doing this now? And especially when we talk about the general stuff at the end of this conversation, you're going to see that there might be another amnesty this summer for all sales and income tax. So there's kind of a lot of confusion as to why they are proposing this. But at the same time, I think they feel that they need to somehow catch up these remote retailers to where they should be. And they don't want to hit them with a club during audit and assess high taxes and high penalties and interest. And a lot of them don't have the record keeping to support where these sales actually should be sourced. So they think
Right.
this 9% will kind of get them where they might want to be. It's a
And
long way to say it's very confusing.
yeah, I think the interesting thing too is like Illinois, the use tax versus the ROT. So a use tax is a 6.25%. 1.25% of that is split by over the jurisdictions, right? In a kind of a blended way. Whereas if you have ROT, you're getting the 6.25 plus the localities rates or the RT or what have you, and they get that percentage. The big use tax, the big portion of that 1.25 goes to Chicago. So little localities really lose out in a use tax scenario too. So you're kind of creating winners and losers by the difference between use tax and ROT as well. So I think the department is trying to get that evened out, meaning the 9%, perhaps then that 2.75% differential will have a little bit more to spread around as opposed to that 1% that they spread around off of the use tax.
If Illinois is willing to kind of do like call it like a consolidated rate, like you can make for like a remote seller for Texas or Alabama or some of those, do you think that might be a long-term solution for some of those filers that may just say, hey, this return is not worth it. I'm allowed to do this. Here's 9%. I'm now just like slapping one rate on it and I don't have to do all this jurisdictional nonsense. Do you think they're exploring that? Or is it just like, this is just an easy way to get taxpayers and it's not going to be a long-term option?
And that's an excellent question, and I think it is a little bit of both. I think they're basically saying we have so much confusion. We're not just talking about a couple hundred. We're talking about tens of thousands of taxpayers that they know are doing this wrong. And
And little
your
ones,
solution is,
right? People that
yeah,
can't
Yeah.
go out and buy
Yeah.
a system. I'm not going to get Avalar
Right.
because I
Yeah.
am, selling out of my basement, right?
Right.
I'm trying to do the best I can, right? So it gives them
So
the option. So I could see it maybe if there's thresholds or something like that, because
yeah.
oftentimes that's the big rub with sales tax is that it's just so incredibly difficult post Wayfair for these little sellers to get it right
Mhm.
too. So
Yeah.
Yeah.
I'd like to
And
say
I
yes, but I'm not sure.
And I think a 9% rate, I think it gets around some of the constitutional challenges because you're not giving them a benefit, because obviously they're going to be paying and charging more tax than some. The only thing that would kind of worry us would be the false claims act case. If someone could say, look, you're charging me this blended rate, you're only supposed to be charging me this 6.25%. So if we get the legislation to also include a reference that carves it out of that
Yeah.
category, yeah, I think that would be very helpful.
And or how the 9% is allocated in it if it makes everyone happy. If it, the
Yeah,
RTA doesn't get their part, they're going to say, well, I'm
yeah,
Chicago and the collar counties and we're supposed to get 0.25, right? Where is it? Or Chicago says, I'm losing because I think that there's a lot more 10.25ers in here than there are
yeah,
nines. So it does that 9% make most of the taxing jurisdictions happy? TBD.
yeah.
So if they pass an amnesty, is that more procedural or administrative in nature as opposed to statutory? How does Illinois do that for those kind of programs?
Yeah, it would be a statutory provision,
Okay.
and then you have these specific dates. It's usually 60 days that you could file them in. But like I said, what's really unusual, this one's for August of 2026, and
Right.
I've never seen one that far down the road. Especially when you might have, and that's for remote sellers. And then if you have one before that for pretty much everybody, that just kind of it seems odd for a lot of different reasons. You would think that at a minimum they would lump the two of them together. It just makes more sense.
Sure.
Yeah, and let's remember, like we talked about earlier, Illinois resides as a state, and then you have Cook County, and then you have Chicago. So what may alleviate some things on the state side might not alleviate all of the taxes that you have too. So I always like to say, Illinois, perhaps you're sitting in Chicago, you're really subject to three different jurisdictions that you think all might think alike. They don't. They don't necessarily have reciprocity with each other, and they don't really, most of the time, care what the other one's doing because they just want their piece of the pie. So, I don't want to just focus on the Department of Revenue and there's also the franchise tax, which is not part of the Department of Revenue, which is also a tax in Illinois. So when we talk about taxing in Illinois, we have to talk about various jurisdictions that, because one has amnesty, that doesn't mean that that impacts the other ones. So we have to be really careful about that as well.
That's an excellent point.
Well, and so then it's as if you knew what we were going to talk about today. So let's maybe talk about the franchise tax, maybe Senate Bill 2325, and what that proposal is, kind of what's going on in the franchise tax space right now.
Sure. So the franchise tax is a very kind of esoteric tax in Illinois. It's based on your paid in capital, and it has an allocation factor, which is unique and not like your Illinois sales factor. So if you think that it really leverages off the income tax, it does not. It's for the ability to transact business in Illinois. It is administered by the Illinois Secretary of State, not the Department of Revenue. They are completely separate entities. Um, it has been repealed, brought back from it. Well, it's been scheduled to be repealed. The repeal has been repealed, so it still exists. Long and short, I don't think it will ever die. Truly, um, the main crux of the franchise tax is to remain in good standing in Illinois. This often comes up when you are having a merger, having a bond issuance, doing some stock issues, and some bank or some entity said, "Can I have your Illinois good standing certificate?" And you say, "What?" And you say, "Oh, franchise tax." That's the main kind of club that they have over this.
And licensing
So,
too. Yeah, licensing
and
provisions.
licensing, if you wanted
Yes.
to have a state contract, they're going to look for your good standing certificate. That often
Yeah.
happens as well. As I said, it's administered by the Secretary of State. So they currently have a $10,000 exemption. So I think about 90% of the entities in Illinois now are not, they have to file the return, but they avail themselves of the exemption and owe $75. Interestingly enough, LLCs, it's a flat rate. You're not subject to all the things that corps are subject to.
Right.
So it really skews towards LLC in Illinois if you have a choice of entity. Um, so now that we have 90% of the small entities, the LLCs, things like that exempt from it, you're really focused on large corporations that don't necessarily have a vote in Illinois for the politics of it. And, it still brings in a couple $100 million. So it's not something that they can get rid of easily. And there's a little bit of a power struggle because the Secretary of State does administer it. It's not just another tax administered by the Department of Revenue.
And I think there's less than,
Currently,
I'm sorry. I was just going to say there's less than 20 people in the department that handles over 100,000 corporations. So for those 20 people, they're generating a couple $100 million of revenue. It's politically, they don't want to give it up. They really don't.
yeah.
Right. Wow.
Currently, the interest is the one of the most onerous parts of this. It's 2% per month.
Mm.
2%, 2%, 2%, add it up, put it all together. We oftentimes see bills that the interest is 2 and 3 times the tax. Because once again, if you think you're looking back from an income tax perspective, if you have an unreported merger, I think our record is the 50s, 1950s, that there were unreported mergers for one of our clients. There's no statute of limitations for them with regards to unreported
Unreported.
mergers.
Mm.
So you're going back, say you're going back to, commonly we have ones that go back to 2006, 5. You're looking at 20 years of 2% per month interest. So the bill that's currently up is to kind of realign interest to like a realistic
Yeah.
interest.
Yeah.
Their position is it's statutory interest. That's just how we have to compute it. So this would change it, but it would only change it going forward. In our minds, at least it's something.
Yeah.
Half of something is better than zero of something. Would we like to go back? Sure, but as written, it goes forward. The interests.
Yeah, we have a
change.
lot of cities in Colorado from a home rule perspective that do 1% per month or 1.5% per month.
Yeah.
So like in the city and county of Denver, if you're doing like a 3-year VDA, right, you're looking at 36% interest on just a sales tax. Maybe you've got a use tax that goes back 7 years and it's a Friday afternoon and I don't feel like thinking hard to figure out to get 7 times 12 correct, right? Like that's a lot. That's a big interest number.
Right.
Yeah.
Right.
And
And oftentimes what happens in these mergers is that they're a compilation of paid in capital. So you have your paid in capital and then you've merged someone in with their paid in capital. So unbeknownst to you,
Right.
you have all of this outstanding liability. And let's be realistic, franchise tax doesn't often reside in the tax department. Sometimes it resides in the legal department. The
Mhm.
legal department doesn't understand the nuances of what the base is. They don't, what's paid in capital. Oftentimes we see they take stock times par is $100. That's the information that they know. They don't know that on a federal return you have $3 billion sitting in additional paid in capital.
Right.
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 That's what the Secretary of State considers it to be. So it's often a hot potato because it doesn't reside in a place in
It's
companies
often
that it
forgotten.
should, or it should reside in multiple places, and it's like, not me, and it just
Yeah.
resides nowhere then.
Is Illinois
Yeah.
capped like Delaware is? Or is
For
it
your
just like
annual
APIC?
payments.
There is a cap on the annual, but there is not a cap on your additional. So when people talk about the $2 million cap, it's a $2 million cap on your annual tax. But if you've had the transactions from 1950, the additional paid in capital is 0.0015. The
Yeah.
annual tax is 0.001. So you could have a $3 billion base and you're at your $2 million cap,
Mhm.
but unbeknownst to you, you have $5 billion that you didn't add
Right.
correctly. They're
Right.
going to go
Yeah.
back and there's no limit on that $5 billion on that. It's the form 1430, which is the increase in capital form that you see. That does not have a cap. And they also argue that that does not have a statute.
Well, that makes, Delaware's what, 250,000 look like, sweet, I'll pay that all day.
deal,
We're
yeah.
just
Like-
we're
like
just getting a
small
ton of
potatoes. Yeah.
Yeah.
a
exactly.
ton of common stock. Just like,
So, like I was alluding to earlier, we talk about the Department of Revenue. We also have to talk about this if you're, and a lot of times the registration is done by someone in legal that says, "Oh yeah, we want to transact in this in Illinois." Sure, check.
Right. Mhm.
Unbeknownst to what the impact
Mm.
of it is.
Right.
Yeah.
Because they don't
So-
understand what
Right.
goes into any kind of computation
Exactly.
on a state basis, right?
Right.
Because I mean, a lot of other states, right, are just like, hey, give us your $50 per year or whatever, right? And
Right.
off you go. But there
Right.
are like the Illinois, the Delawares, some of these other states that no, you have some financial information that you have to provide, and there could be some additional tax involved.
Exactly. And from a legal perspective, one of the abilities is the ability to use the court system, meaning you become the plaintiff. If you're not registered, then there is an argument that you are not able to avail yourselves of the court. So legal departments oftentimes will register everywhere, right? They say I might sneeze in
Yeah.
Illinois someday. I want to just be registered
Yeah.
just in case.
Right.
And they don't
Yeah, and-
understand the impact. And then they get it. And then they say, "Hey, tax, can you give me these numbers to
Mhm.
apportion
Mhm.
this?" And it's like, holy cow, what is
Yeah.
this? And then they wonder, the minute that you file, they're like, "Where have you been all my life?" Right?
Right,
And they
right.
will,
Well,
Yeah.
and then if you want to withdraw, good luck.
Get
Good
caught
luck.
up. Yeah.
Yep,
Good
you gotta
luck
get caught up.
because it's a very hard thing to say, "I'm no longer transacting business in Illinois."
Right.
Yeah.
Well,
Yeah.
and then
And
if you haven't been paying correctly
Yes.
and you
Yeah.
want to withdraw, you have to get
Right.
caught up and, get yourself in good standing.
Right. And like I
Yeah.
said, there's a lot of these stock times par value. Oh, my base is 100. There's a check mark on the form that says, "I'm just going to elect to pay on everything to make it easy." Then I don't have to fill out those numbers. I don't have to apportion it. And if you do that, it is a world of hurt to try to go back then and say, "Whoops, I shouldn't have done that." So
Yeah.
oftentimes we'll see $100, check the box, go on my merry way. Someone wants to merge and they say, "Let me see your franchise tax return." And it becomes part of the due diligence of a merger that you have been way underreporting for years.
Oof.
And what's
Yeah.
times you have these self-created problems where people will say, "You know what? We have all these shell corporations or empty, non-doing business corporations. Let's merge them together or clean them up." We've seen a situation where someone took a $100 filer that had 0 factor in Illinois and put it with another entity that had 100% factor. And by putting the two together, they created a $2 million liability. And all they were supposed to do was get rid of these entities that were paying $75 a year.
Right.
And
Right.
unfortunately, when we got involved, they had already dissolved the other company. If they hadn't dissolved the company, we could have undone it. And what did the person at the Secretary of State say, Natalie?
Yeah, they said, "Oh, that's
You would-
interesting." I'm saying interesting. I think they said funny.
Funny.
I didn't find it funny. If you
Yeah.
would have done it the other way, it would have still been $75.
Yeah. So $2 million versus, can you imagine the person at the company who had to go and tell the CEO and CFO, "We have to pay $2 million because we merged this the wrong way."
So
The
nope,
wrong
I
entity
would've
survived.
I would have quit
Yeah.
first,
Look
found a new
at
job.
your entities.
Yeah.
Talk to your legal
It's-
group. If you're in the tax department, talk to your legal group and say, "Hey, on this entity, can you just give me an idea of where we are and where we're registered for your purposes? Because I want to pair it up with where I'm at. What returns, we often tell our clients, having a point person in other departments is really important, that you can just bounce something off and say, "Hey, tax person, you're not so scary. Let's go to lunch." And then I know now
Yeah.
when I have a tax
Yeah.
question, I have someone, or,
Yeah.
"Hey, legal person, I don't ever want
Yeah.
to get in litigation, but if I have a question about this, it's really
Yeah.
imperative to talk amongst yourselves and share information. And it oftentimes prevent these things. Or if you get on the front end, we're buying someone, how is that structure going to
Yeah.
happen? Because we've seen it where we get involved and we say, okay, you've got it structured this way. I just want you to know it's going to cost $500,000 Illinois franchise tax. If you guys need the structure, you just need to bake in this cost. The last thing that a lot of our clients want are surprises. If they're doing a major transaction that is important from the business operations perspective, I'm not going to hold it up for franchise tax. I just want to include the cost so that they know.
Right.
Right.
Because
And
as
that's
tax people, you don't want to be the one that comes in and says, whoops.
Right.
Yeah, and if you start a new job or in a position where you have just got there right after the merger, you want to make sure you look at the franchise tax because, like Natalie was alluding to, there might be some reserve set aside for these tax issues that won't hit your budget. So if you can get the franchise tax issue addressed with the reserve from the merger, all the better, and then you can claim responsibility going forward.
Man, a lot
Fun
of
stuff.
cautionary tales here, right?
Right.
That's,
Here's on a Friday afternoon. Sorry.
That's all good.
Right. If you wanted, let's say you didn't really, under the definitions of what it is with the Secretary of State, transact business in Illinois. But if, let's say, you wanted to take something to court for whatever reason, could you then just go register with the Secretary of State and then kind of file within the court system? Or is there like a kind of a waiting period from like the date of registration to, when you could kind of utilize the court system?
Yeah, there's just a authority to transact business. It's just something you
Yeah,
go to them with and you say you fill out a lot of
pretty quick.
information. There is a question on there, when did you start transacting business in Illinois? So that's often a very kind of squishy
Yeah.
answer from our perspective. But we have clients that go
In
back and
theory.
say, oh, we have been
Yeah.
in theory
Yeah.
doing it since 2020. Or you
Yeah.
could say today, or, it varies. And then you pay kind of in advance. And that establishes what's called your measurement date, which is also kind of a weird concept. Your filing date is based on when you first authority to transact business. So you could have a measurement date of 7/31, and then your return is due 60 days after that. So that's then due 10/1. That's why there's no rhyme or reason to your reporting period. So mirror that up then with your federal return and everything else. It makes it really complicated. And the Secretary of State doesn't really understand the concept of, I don't know what my pick is as of July 31st.
Yeah.
Right.
Because that's not
Right.
really a date in my world.
Yeah, it's not a
date in your
reporting date.
world,
Right.
it's not
Right.
a
Yeah.
date point, right? So oftentimes we tell our clients, get as close as you can, right? I mean, if you don't have a magic 7/31, you have a second quarter if you calendar
Yeah.
year.
Yeah.
But that's kind of the nuance of how you get these strange reporting periods and how that complicates things as well because they don't line up nicely with the income tax.
Yeah, and we've also helped a couple of corporations convert to LLCs. If they have, to your point earlier about the cap, if you're paying over $1 million a year consistently, but you don't have to be a C corp, you're not publicly traded or anything, just convert to an LLC. Then going forward, like Natalie said, you only have to pay the $200. You don't have to worry
So
about
is
any of this anymore.
Is that your legal status? So you could be an LLC from an incorporation standpoint, but with the IRS, you could have checked the box and still been
We're
a C
talking
corp?
about like a C corp. That
A C corp.
free-
Yeah, yeah.
Right. But let's say
Right,
you
but-
were, but like if you were an LLC and you wanted to, right, be
If you check the, yeah, if you're treated as a C corp with your LLC, it doesn't subject you to the
so any kind of
franchise
election
tax.
that you've made with the
Yeah, right, 'cause
IRS
it's
doesn't
the
legal
impact
fo-
your
Yeah, it's the
Correct.
legal form
Yeah.
of the entity as
Yes.
opposed to
Yep.
how it's taxed
tax
Yep.
with the
for
IRS.
federal
Yep.
and state
Yeah.
purposes.
Yep, correct.
But Stace, I stand by our statement, and I'm even further in saying, hey, Secretary of State, we can kind of help you calculate it, but we're not going to advise you on that because that's more of a legal issue. And
Correct.
That's why we get-
especially with Illinois,
you guys-
I'm
yeah,
going to
as
certainly
attorneys,
stand by
you're
that
probably
statement.
the most of anyone in Illinois, the franchise tax, oftentimes because people don't really enjoy it. Not that you enjoy tax all the time, but it's a very esoteric tax. So And it really lends itself to a lot of legal issues embedded. It's really a legal filing in
Right.
most
Yeah.
cases.
Yes.
So we definitely work with accounting firms because they usually have the data, right?
Correct.
But
Sure.
they don't necessarily want to get involved. And oftentimes, too, there's a legal group in the Secretary of State that is the only opportunity for any negotiation. And once you start talking to a lawyer there, you have to be a lawyer yourself, or you're representing the client. So oftentimes this is more of a legal type
Sure.
filing than a
Yeah.
traditional income sales tax return.
Yeah. No, and I
Yeah.
think, I mean, those of us that are, that do state tax, right? I do think that, we tend to get, our clients will be like, well, this says tax on it, so therefore,
Yeah.
here, tax person, you deal with it,
Yeah.
right? But
Yeah.
I mean, but
Yeah.
I think the kind of takeaway here is that this tax can be a gotcha. And I don't
Oh,
think
for
that,
Oh, big
sure.
time.
that
Yeah.
a lot
Yeah.
of taxpayers may fully appreciate that.
Yeah.
Exactly.
We've had clients that were threatened to have to doing business in Illinois because their license was being held up. We've had bonds that were held up. We've had lending. Someone was actually going to lease a building in the city of Chicago, and the landlord wouldn't grant them the lease until they got the letter of good standing. So we kind of act as intermediaries, saying, we've done enough of these that we're working on it for our client. We could basically say that we know that they'll get back in good standing.
Yeah.
Another best practice would be, don't give anything to the Secretary of State if you don't know what they're going to use it for, especially federal consolidated returns.
On that point, they'll ask for federal consolidated returns. They
yeah,
don't
give them to 'em.
necessarily understand the concept of a federal consolidated return. This tax, the Illinois franchise tax, is entity by entity.
Hmm.
So they don't necessarily understand consolidation, right? And our other takeaway from that is they don't have the same non-disclosure that the Department of Revenue do with regards to confidentiality. A FOIA request to the Secretary of State may allow them to give out your federal return.
Yeah.
So we often tell our clients, just
Yeah.
don't. They are not the Department of Revenue. The confidentiality that you have with the IRS and Department of Revenue does not necessarily exist with them. They will put things into the legal group so that it becomes more privileged, but it's not the same. So
Yeah.
if you ever going to, and they routinely do this, give us your federal consolidated return. First off, it's boxes, right? This is
Yeah.
not something I can just like send down to you, scan it, and send it to you. It's boxes of material, and there's a whole bunch of entities in there that
Yeah.
you're not privy to because I'm talking about A, not A, B, C, and what have you. So if you get one of those requests, take a pause, talk to someone before you
Yeah.
do it.
Don't give it to them. Yeah.
Yeah.
And kind of speaking to the third bucket of kind of jurisdictions, talked about the state. We kind of, Secretary of State is kind of the offshoot. But then, we brought up Chicago and Cook County. So what's going on in Chicago? Anything fun happening
What's not going on in Chicago?
Yeah.
other than
Yeah.
Cubs opening season?
Yeah.
Opening
It's opening day
day?
today,
Yeah,
actually.
yeah,
Yeah. Opening day today.
It's opening day here for the Rockies, except for it's
Yeah.
snowing.
What,
So
50
yeah, so
or what, Dave? It's,
Yeah. Is that why you're wearing your blue jacket, Natalie?
I
Or-
was just
yeah.
Yeah.
thinking the same thing.
you're supporting your
Yeah.
Cubs. Yeah.
Yes. Right.
I mean, my mom grew up South Side, so that's why maybe I'm wearing the gray.
Yeah.
Okay. Well,
It's
Dave's
I'm,
not
I'm
racist, and I'm a Cubs fan, and he's a Sox fan.
yeah.
Yeah.
It
It was
could
a,
happen.
it was very tough last year.
Right. Yeah.
The worst year
wasn't
ever.
so good. Yeah.
Yeah.
It was not so good last year.
It's
Yeah.
generally not easy to be a Chicago sports fan outside,
Yeah,
the
it
80s
doesn't-
and
yeah,
90s.
it doesn't matter which team. Yeah.
Yeah. It just, I don't know why. It just, yeah, we're
But
jealous
it's
of a
not
lot
easy
of.
to- It's not easy to be a Chicago taxpayer either. So
There we
Yeah.
go. Let's bring it all back. So what
Yeah.
do we got going on in the city?
So in the city, they're looking for $1 billion. That's their budget shortfall for this year. They did some borrowing, but it still didn't get them there. So they're being a little more aggressive in their audits. And what's amazing is a lot of the clients we talk to have been audited multiple times by the city over the last 10, 20 years. And this most recent audit, the auditors are bringing up new things. So especially on the lease tax side, and we feel bad for them because usually if you have an audit history, there's some kind of understanding. If you didn't bring it up the last audit, you're going to be. And the old person who I shouldn't say old, the prior person in charge of the city finance department was a very good prospective person. He's like, okay, if we missed something last time and you missed it, we're going to do it prospective only. And everybody was happy with that because it gives you some education and allows it. But now it seems like they're going back. That person retired and now they're dealing with this on we got you. And we're seeing it mostly on the lease tax side. And
Yeah,
a
so
lot of people,
Chicago
yeah.
has this, like, personal property lease
Mhm.
transaction tax. It's a
Mhm.
nice way of saying, like, cloud computing and anything
Yep.
you use on your laptop, right? I mean, let's
Yeah.
not talk about a personal property lease
Yeah.
transaction. They've had, like, all of these bulletins where they say, "We're clarifying, we're clarifying." They were
So it's,
clarifying from 1980 before any of this exists, but that's kind of an aside. So,
yeah.
that's where Chicago's unique to Illinois. Illinois might give you the 5 prong or they might do this and you're on your way. Chicago is going to tax like your SAP, your Lexus, your Bloomberg,
And any
your
type of
any
service.
of
Yeah.
those, any type of those computer services that you're
Mhm.
using at 10.25%, right? This is not like low
Yeah.
numbers.
Yeah, and they just raised it to 11% this January, and there used to be a differential between data storage and, it used to be at a lower at 5%, not anymore, it's all 11. So it's really a very aggressive tax. And when people, if you think about it, especially on the IT side, some of these contracts you're signing are pretty large contracts. And so when you get hit with a 11% tax on something you didn't know about, the one nice thing about the city is they say we'll collect it from either the supplier or the taxpayer. So if your supplier has been charging you, that's a good thing. A lot of times the suppliers don't charge it. There was even a situation where a large suppliers entered into a agreement where they weren't collecting it, but then on a going forward basis, they stopped collecting it. So a lot of the clients thought they were paying it and they're not. There's also one nice thing about the city is they say we're going to apportion or allocate it. So they're only going to collect it based on your usage in the city of Chicago. So this is great during COVID because a lot of the employees weren't in the city. So a lot of people kind of were able to reduce their exposure here. But now that that's over, you have to kind of do this on an annual basis, figure out how many of your employees are actually using this in Chicago. And if they use it in Chicago, more than they don't, then that employee is counted as a Chicago user.
And
So
we see it a lot where the entity will say, I'm not going to necessarily only tax you on 25%. I'm going to either zero tax you and you have to assess your own use tax, or I'm going to 100% tax, like you mentioned earlier. And then you're going to provide the affidavit, and I'm going to ask you to claim a refund from the city. So
yeah,
it really is messy.
Yeah,
You
because
very
know, it's
much.
kind of what you prefer. If you can self-assess and you set up a direct pay, that's probably the easiest way. But some companies don't like that. They feel like, I don't know if I'm going to trust you. But then they'll say, I'm only going to assess you 100%. And you're like, well, wait a minute, it's 25. So I'm now going to go through you my affidavit of apportionment. You have to claim the refund because you're the payer, not me. And it's a whole issue.
yep, and, you know, logistically speaking, right, a multiple points of use is great in theory, but in order to actually get that to show up on an invoice and to, like, implement the ability to
Yeah.
do that
Oh,
is
sorry.
not easy, right? Because
Right.
Yes.
we've had this conversation, um, Stacy might be thinking of the same client because we are actually doing they're a SaaS company, a refund claim for it was actually an insurance company that was like, "Hey, I know I paid this, PPL, the lease transaction tax years and years and years ago, but here's my exemption certificate. Go back, get me, my money back." It's for like 10 grand. So they've probably paid us more money to actually get the
Yeah.
Yes.
refund
Yeah.
Yes.
Right.
because now we're going through like a mini audit for that
Yes.
return period. And it's
Yes.
like, okay,
Right.
well, I need to see all of your transactions. I need to see all of your exemption certificates. I need to see all
Yeah.
of this and all of this. And it's, it's very cumbersome. And, the contrary is too, if you're going to take, and we kind of talk with our clients about this from an MPU perspective. Okay, if you're going to apportion things out of the city, what about the other clients you have that you probably need to be putting into the city from a usage
Right.
perspective? So
Right.
Right.
where do you want to go with that? Because the same client was like, hey, we only have like 4 users in New York. Everyone else is, Washington, Texas. It's like, okay, cool. Well, we're licensed there too. But now I gotta charge you sales tax in Texas and Washington and all the other places. So you're not really getting the arbitrage you want.
Yes, right.
Yeah. And we had a client who we jumped on this one a little later. They're not located in Chicago, but they had customers in Chicago. And this is, and I'll just say this because you guys have probably seen it, both on the lawyer side, the CPA side, the consultant side. People hire people who don't know state tax. And the first attorney they hired basically litigated that, they were trying to apply the Hertz case when this client had customers in the city and had equipment in the city. And we're like, the Hertz case doesn't apply. And unfortunately, when we got involved, the city was really angry at them because they spent a lot of time in litigation over something that shouldn't have been in litigation. And so we kind of had to first calm the city down on behalf of our client and just kind of explain that, and we see this all the time. And that's what we try to explain. You don't hire, a general practitioner to do brain surgery. You need to have someone who's familiar with the different areas just to get best answers. And a lot of times when we get involved on the second or third time, our clients are really frustrated, already pay so much fees to get nowhere. And it's kind of puts all of us at a disadvantage because we're trying to help them, but they're angry because they've already paid all this money and fee to get nowhere. So we would just strongly recommend whoever people they try and find someone who's familiar with the issue that's before them, because it just makes it worse. Or even yet we've seen so many situations where they give the wrong information to the jurisdiction, and now all of a sudden you were dealing with one, and now you have 3 or 4 issues because this information is confusing everybody. So anything you could do to basically make it and one thing that Chicago's a home rule, so they can basically create any tax they want in Illinois. You have to have above a certain people in it. They have an amusement tax as well, and within the last couple of years, they've gotten a lot of attention nationally because of their streaming and gaming, electronic, streaming and audio service. But a lot of the other smaller villages and uh, have started to impose these amusement tax. And Natalie and I were at one client who received a notice from the city of Evanston, who just enacted it. And we basically, on behalf of the client, worked with the city of Evanston to make sure the tax was constitutional to fix it because our client didn't want to pay an unconstitutional tax and then have
Right.
the false claim tax be come after.
know what
It's like,
you
yeah,
get at, but
yeah,
this isn't doing it correctly, right? And once
yeah,
again, like,
yeah,
I don't want to go through protracted litigation for them to say, oh, I'm going to amend the ordinance now 10 years
yeah,
later and go through
yeah,
all these court things
yeah,
because I have an obligation to charge my clients correctly. I don't think
yep,
this, I don't think this currently enacted ordinance works, but I
yeah,
know how it could work,
yep,
or I know how it doesn't
yeah,
work. And that's the thing too, like cut and paste. They'll say, "Oh, well, we took it from Chicago and we took this little piece or this little piece." And then you have like
yeah,
large multi-state
yeah,
organizations that have their own type of legislation that they want to see enacted. And they'll be like, "Oh, well, I took a piece there and I took a piece here." So, long and short, Chicago amusement tax too is another kind of a little bit of a trap. Cook County, then they're their own fiefdom as well. So they'll
yeah,
say, I
yeah,
have parking issues. I have, my own taxes in Cook County. So, we once had someone that was interested. They were a, a company from Italy and they were interested in coming over and they had picked Chicago. And we're like,
yeah,
we love it. It's our home, but it's incredibly difficult. You have a VAT over there, right? And that's all you do, right? And then you come here and you're like, wait a minute, I have the IRS, I have the Department of Revenue, I have Cook County, I have the city, and I have the Secretary of State. Like,
yeah.
can't I just fill out one
Oh,
form and can't they
mhm,
share it?
yeah,
No such luck.
Right.
So,
yeah,
and and that's like a best practice also, like understand your footprint, right? You think you're only in Chicago, or you think only someone visits there, or I don't have Nexus, or what creates Nexus anymore. Just kind of segue into like a larger discussion on state tax. You really have to keep up to date with where you are now, where you're availing yourself of. You don't even have to be there anymore necessarily, where your
Mhm.
customers
yeah,
are. It's
Yep.
just
yeah.
it's just much more complicated.
Yeah, an arbitration is when the city will issue. It's the state does this too. A nine-figure assessment. Big you are a nine-figure assessment is a big assessment, and we just had one from Chicago a couple years ago. It went from nine figures to a no change letter. Can you imagine the CFO telling the CEO and the during your quarterly reports, we might owe $100 million, but we might not.
Yeah.
And it just and to go from $100 million to zero, it makes
Yeah.
us look good, but at the same time, you don't want to be in that situation because it should have never been $100 million. So you're having,
Yeah.
and a lot of people are feeling that if they don't give anything to the auditor the way, well, no, they're not going to. They're just going to
Yeah, I
issue these
know.
big assessments.
And the last point on that, Illinois is notorious for responsible officers. So
Oh yeah,
sometimes the responsible officers will get the $1 million assessment
Yep.
when they're on their vacation, and then
yeah,
you really get a call.
Yep.
How?
yeah,
What?
Yep.
How is this me? Or you'll
yeah,
leave a company and you'll still be listed in
Yep.
Illinois
yeah,
as the responsible officer. So lo and behold, something gets assessed and it comes to you.
Yeah.
So check
yeah. Our favorite,
check who your
yeah.
officers are, and check, if you're leaving a company, that you leave being an officer as well.
When we were in industry, there was a Chicago police officer who showed up on the ground floor and says, "I've been instructed by the finance department to either collect all the unpaid parking tickets or come back with the officer of the company." It's amazing how quickly
What?
a check was issued.
I'm
Yeah,
sure. Yes.
yeah,
Back and take the
yes,
check.
yeah. So it was very, yeah,
Sometimes our tax is not personal, but when it gets to the personal level, that's
Oh,
where that's
yeah.
really important, right?
Oh, absolutely. Absolutely. That you as like if you're in the tax department of a company, you don't want one of those corporate officers showing up on your
No.
doorstep saying, I got this in the mail.
Right.
What
yeah,
is this?"
Yes.
yeah,
Yeah, exactly.
yeah, yeah.
So,
So
as we wrap up,
yep.
is there anything that you think our listeners should know or pay attention to or keep their ear to the ground on when it comes to Illinois?
And I apologize when we were talking about the Pepsi case. I should add, um, the department will acknowledge 80/20 companies if they're done correctly with substance in them. We've seen a bunch of them done that way. So you want to make sure, don't be afraid of them, because if you put the required substance, now it's going to take a lot of time and you have to find business entities and stuff like that that goes in it. But if you do it right, they've accepted them under audit. And I think that there's current legislation out there that's trying to take away some of the benefits of the 80/20 company. And I think because of the Pepsi case and some other abuses that might be out there, that people are looking at that. Hopefully there's some pushback on that, because it's good tax policy. We're not worldwide. We're unitary, but we're not worldwide. So, I think the 80/20 company does serve a purpose here.
And just from a big perspective, our budget is due by the end of May. Um, it currently, so it's our legislative session. We've been told, and it's been talked, that there isn't going to be a lot of tax things going on this time. We have a pretty, I wouldn't say balanced, but with how they move things around, it can appear balanced. So we're not looking for anything, but Illinois oftentimes floats all of these thousands of bills, and then, the 29th of May, it's an omnibus bill
Yeah.
that's thousands of pages that, oh my gosh, has like tax provision in it. We're not currently like really looking at anything, but that doesn't mean it's can't happen. But that's the time to be looking at, is kind of the May. They like to get out of Dodge by the end of May. Sometimes if it goes over, they also need more votes.
Ah,
So they need a supermajority, although Illinois is run by mostly Democrats. So the governor is Democrat and Senate and the houses, but it's still just adds an added burden that they don't like to get to. So just keep listening. Things come out. Like Dave said, Chicago has its own separate budget. They moved some around and did some borrowing. So it's not immediate, but they have a kind of a strategic outlook that they are under. So they're going to be looking at things as well. So just keep your ear out. And Department of Revenue is always coming up with kind of their new issues and what they're
Well,
looking at. So
can jump on the retail
Yeah.
delivery fee bandwagon. You're welcome.
right.
There you go. Yeah, yeah, yeah. I think the one area that they're going to look for revenue is the amnesty program. So that's almost a guarantee that will happen. And just make sure that if you have any issues, you kind of fall into that window. I think that'll be for July 1st, 2018 through June 30th of 24. And that would probably be this year. So usually they
And
typically
that
put
would
like
be,
August, September, like something like
yeah,
that period.
or
Should
usually
Yeah.
that
try
even
to
be
be
for all registered
after the
taxpayers?
filing season. So it,
Yeah.
kind of,
Sales and income. Yeah.
yeah, it'll be set, not Secretary of State, so not franchise tax. They
Yep.
have their own separate amnesty.
They're
They
actually
had
due for
one.
one too. Yeah. It's been a
Yeah, they're
while.
due for
Yeah.
one too, but we haven't had anything about it.
Yeah.
So
Okay.
Yeah.
Excellent. Well, Dave, Natalie, thank you so much for your time and your expertise. And maybe you like it or not, but I'm sure your phone will ring for something, maybe a bunch of franchise tax that
Yeah.
right,
are now like,
Right.
Yeah.
Yeah. This might
Yeah.
be eye opening to a bunch of taxpayers out
right,
there.
right.
So
Yeah.
Oftentimes we like to do that. We just like to bring up things like
yeah.
we started it with. We're not experts on everything at all times. Not every one of us is. But just to give you like thoughts, you're going through a transaction.
Mhm.
Oh gosh, I think there might be something with that awful franchise tax. Just to give you enough knowledge to like
Right.
make you think about
Yeah.
things.
Yeah.
Yeah.
Oh, absolutely. Awareness. Awareness.
Yes,
Awareness.
Yes.
exactly.
Yes.
Well,
Yeah.
great.
Well,
Thank
thank you
you
guys for
again.
having us. Yeah. It was a lot of fun. Thank
Yeah.
you.
Yeah.
Enjoyed
thank
it.
you so much. This is another episode of Saltivation. Till next time.